What's up, everyone? This is Proving the Market, and I'm Kojax Pro, and I'm happy to be back again in this channel. I did take a break for about a month, and the reason is because there were certain things happening, in my personal life that wanted me to take the momentary break off the channel. But I was very well active on the chat, and I apologize for not bringing you guys real forex insights and updates as regards what's happening in the forex market. But now I'm back, and I'm back for good. Now, I'll still reiterate here that I did take some trading opportunity. I took some trades actually last month, the month of August, and we had some of our trades take profit. And there was this rave on social media about some currency pairs that very sophisticated forex traders were watching and were taking trades on. Kudos anyway to Dabo Willis, because he's a very good trader and he's a professional trader at that. I respect him a lot, like really a lot. And I'm going to say here that the GBP trade, I knew it was going to take profit. There was no doubt about that. Simple price action. Now, I wasn't on the GBP trade. I was actually on the USD CHF trade. Now, the USD CHF trade gave us massive profit, just like GBP hit take profit. So USD CHF and GBP are kind of contrary pairs. So if GBP is going up, most times USD CHF goes down. So I had a better opportunity on USD CHF and I took advantage of it. And I'm going to place a screenshot of our massive and marvelous trade right about here. And that's how we trade. I enjoy taking trades like this. Exactly, guys. Being a swing trader is good because just like I took a break, it doesn't mean I was inactive on the charts. I was actually active, but what I wasn't doing was sticking to my chair and looking at the screen or a forex chart. I don't do that, and that's not the best way to trade. So I made a lot of money from USD CHF, and I'm about to make a lot of money now from Bitcoin, and I want you guys to be a part of it. Now, if you love the way I explain the charts to you guys, I've got something good for you at the end of this video, so stick around to the end. Now, without wasting so much time, let's see what the charts has to offer for us today. I'm actually looking at Bitcoin, and if we have some more time, we might touch on a few other currency pairs, but Bitcoin is the main one on our watch list now. So let's go. So guys, this is our Bitcoin chart. And I want to point out here that just like if you look at the news, like in the past 2-3 weeks, you can see how massive the stock of Oracle rose that propelled Larry Ellison to the second position, and not only the second richest person, he's just a little bit shy of Elon Musk. Now, I enjoy watching these people because they inspire me a lot, like really inspire me a lot. But why it relates to this video, guys, is if you are a stock trader, you would have been able to tell that the Oracle stock was about rising. I mean, it's clearly stated on the charts. That's how you go about reading the charts, that you know exactly what the market's about to do. And that's a very good stage to be in your trading game, when you can accurately predict that the market is about to move. As a matter of fact, the market tells you that it's about to move. And that's the joy of trading once you get to this stage. If you were a stock trader into Apple, Oracle, all those kind of big themes, you might have been able to take advantage of the Oracle trade, of the Oracle stock spike trade. And that is how the forex market also works. I'm going to show you now that it also applies to the cryptocurrency. Now, here is Bitcoin. If you were a learner, you might just come to this Bitcoin chart and see that, oh, how do I take advantage of this? How do I take advantage of this? This is the trick. It's not really a trick. It's a methodology, and let's get right into it. Now, this is BTC. How I trade, I love to come on the highest time frames. Now, when you come to a blank chart like this, I am a proponent of having your chart stripped off of all manner of indicators, and your ability to read the price or the candlesticks in the market determines how good you are as a trader and how well you'll be able to perform in terms of extracting profits consistently. Now, if you don't have a lot of things on your charts, your chart is not cluttered in any way, you're going to make a lot of money. So when I come over to the monthly time frame for BTC, all I want to do is I want to see where BTC is heading, and that's where the highest time frame, makes this kind of information available. If you go over to the 1 mile chart, the 15-minute chart, you're just going to be sidelined. Your view will be myopic. You're not going to see exactly what the highest time frame is doing. Now, it's not an unknown fact that Bitcoin is bullish, and you can see right here from simple price action. So higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Now this is a potentially higher high because it's broken. This is potentially higher high because it's broken this last high for Bitcoin. So Bitcoin is bullish, clearly, and we have established that Bitcoin is bullish. What next do we do? The next thing we do is we want to go over to the lower time frames to know how to take the information we have gotten from the highest time frame, in aka the monthly time frame, telling us that Bitcoin is bullish. We'll take that information down and scale it down to the least time frame to be able to take a trade in the same direction of the monthly bias. Now, what we'll do now, the next time frame we'll be heading to now is the weekly time frame. So when we go over to the weekly time frame, since the monthly has told us that we are bullish, all we do in the weekly time frame is to come and plot our key zones. Now, key zones are very important, guys, because if you don't know how to plot your key zones as a forex trader, no matter how savvy you are in terms of technical analysis, you're going to have a lot of your trades hit stop loss. I'm not kidding about that. A lot of traders, banter about having their trades stopped out all the times and always, complaining. But most times I look at these things and find out that people, traders specifically, don't know how to draw key levels well. So key levels simply, I've talked about it in some of my videos, and key levels is something that if you don't draw them well, guys, the market is going to get to that level that you think is a key level, which you have clearly plotted out on your charts, and mess around it. Now, as a golden rule, whenever you see at least 2 reactions, it constitutes a key level. And ideally, you should draw your key levels on the higher time frame. So you can see now that we are on the weekly time frame. So that's the perfect time frame to draw a key level. So all I do is I just look forward for 2 levels at least where there have been reactions. So there was a reaction here and there's a reaction here. So so there was a reaction here and reaction here. And I'm just going to get out my rectangular code. So we don't use lines to draw key levels. We use zones. So this is a zone. I've plotted it out now. So we've gotten the first zone. All I'll do is just to clone this. Clone it. So that's where TradingView is good, because it gives you this ability to clone your rectangles, so you don't have to keep on replotting the rectangles to the to the right width which you want to plot them. So I'm going to look out for the next zone to put. So I see a zone right about here. So there was a zone here, and you can see the market came to react about here. So 2 reaction points, and I'll take this zone and put there. So that's the key level as well. That has been plotted. And let's just add one more level. Okay, so let's just add one more level. There was a key level right about here. And okay, so we see one more level here, and this is other reaction. Don't know why this. Yeah, so this is this other reaction here. So this area constitutes a key level as well, and I'm going to clone this as I did before. Clone it and bring it all the way down here. So that's a key level as well. Now there is this law in Forex and price action. You can see now we have broken out into a bear area. What I mean by a bear area, guys, price have not come here initially, in the past. So other times we have past data. We have to rely on past data to be able to plot our key level. But you can see clearly now that BTC is trading in a bear land, in no man's land. How will you be able to tell where our next major key level will be? I'm going to teach you guys something on this channel now, on this particular video, so that you can apply it to your analysis whenever you're trading. And you should only do this on the higher time frames. Don't do this on the lower time frames, because they're going to mess it up on the lower time. Price action will mess it up on the lower time frames. Now, you see this swing. I'm going to show you something. So see this swing right here. So price swung to this place and then retested here. Now this is a major level. How do we tell the next major level? Because apparently we have not had reaction points to be able to draw another major level. So look at this. There's this low that says, I'm going to use a line. So A to B. So I'm just going to name here. So where's my, so this point is A, and I put it here and clone it. I'll take the clone, put it right there, and rename it B. So there is law that says A to B is going to be equal to C to D. Now, so I'll just call here C, and then clone it and call here D. Now, the only provisor or parameter that this criteria needs to meet to be able to swing in this manner is if they pull back from B. So if they pull back from B gets to at least 50% of the entire distance between A to B. So this is A to B. Now 50% is somewhere in the middle. If they pull back from B to C gets to at least 50% of that entire distance from A to B, it's valid. And what this simply means is that price, so I'm just going to take out this one now to be able to show you guys exactly why. So A to B now is an entire distance. I'm going to clone it. The entire distance from A to B, once C meets that criteria, price is going to swing in with that same distance from C to D. Now, using the intrigues, or the knowledge which I've showed you guys from this illustration, we're going to apply it now to BTC. Now we can see here that BTC made a swing right here. So this is first swing. So we can use here as A to B. Now you can see that this is at least half the distance. Actually, this is the entire move. So this is A to B. So this is the entire move. So this is the whole retracement. Now A to B, you can see that at least this is half the entire distance. Now the market came to half the entire distance actually here and stopped and then moved again to the upside. So that simply tells me that you see this entire distance right about here from this swing to this swing. I'm just going to close. So this swing to this swing is A to B. So when I clone it now, so I'm doing all this to know where BTC is heading to. So I'm put it like this, C to D. You can see clearly that BTC is heading to this region right about here. Now, this is mathematical analysis as a forex trader, and it only comes with experience, and that's why I'm giving out this knowledge here. Now you can see that I've put here that BTC is about to get to this region. So currently BTC is trading at $113,900 per coin, and I'm giving you guys with this futuristic projection that BTC, if it continues in its bullish fashion, is going to hit 254,700 coins, per coin, $1,000 per coin. And because of I've put that projection there, I'll just simply get my monthly 2 and clone it and then put a major key level here. So all these things I've done is to be able to get the next key level if the market continues to move in a bullish fashion. Now that has been done. I'm just going to take out all these other tools. So this is what we do on the weekly time frame, guys, just to draw our key levels and know where the market is going and be able to take advantage of it. Now we have drawn our key levels. You can see how our chart looks nice and good. If you're enjoying the video up to this point and seeing exactly how to go about your trading, the succinct and quiet methodologies that professional traders like me employ to be able to tell exactly where the market is going to, you can see I'm not chasing a lot of things. I'm just trying to find out. I have one mission now, just to find out how to be able to take advantage of a bullish move, the bullish inside that has been printed on the monthly time frame for Bitcoin. I want to be able to get all the information from what the chart is giving me, because the chart, guys, is mass human psychology. Everything you see on the chart are all characteristics of human psychology. The laws of supply and demand, everything is imprinted on how human beings behave, and everything shows on the chart. Now, if you are able to garner that kind of information and then use it to your advantage as a trader, you're going to be very, very profitable. You're going to make a lot of money from this game. So this is now what we have for BTC. Now we have plotted our levels on the weekly time frame. Let's go over to the next time frame to be able to see what next will happen for Bitcoin. And the next time frame, guys, is the daily time frame. So now we're on the daily time frame, and all we do on the daily time frame, guys, is to know the prevailing trend within the overall trend. So this is, you can see clearly that the daily time frame also shows a bullish trend. However, let's point out something. Let's see exactly what's happening on the daily time frame. We can see that this swing right about here, from this swing to this point, and there was a pullback, and then the market has continued to move to the upside. Now, in pulling back, it created the 100% retracement, which was the last. So the 100% retracement, which was the last zone that was created there. I'm just going to place our zone 2 there. And we've seen that the market came here. So guys, see what happened here. And I'll tell you what actually happened. You see this area, this entire area. So when the market came here, created a pullback, gave us opportunity to take more trades. I knew the market was going to come here and hold and shake out a lot of, newbie traders or people that are not seeing the market for what it really is. Most traders don't see these levels, guys. I mean, if you're able to tell exactly and plot your key levels well, and to tell exactly where those key levels are on your chart, you know how to be cautious around taking trades. You cannot be coming to this zone where the market has come to make 2 previous reaction, making it a strong zone, at least for the daily time frame. You can't come here and wanting to be forcing trades. Do you know a lot of trades? Do you know how many trades that were, taken here and lost? A lot of traders blew their account here. You see this move, the market broke above. Oh, the people say it wants to rise, or if it will come down. Before you know it will just come down. The market now breaks above with a strong bullish candle. So if you look at that clearly, you see that that's a strong bullish candle. You will start wanting to take trades. Oh, the market is now ready to go again because the trend is bullish. All of a sudden, the market came back again and still took out their stops. Took out a lot of stops. So there is a way to go about this, guys. So as at this point, when these things were happening right about here, I don't take trades. As a matter of fact, if at all there is any trade that is still open, it might be trades that I took here, that I have taken out some profits here and aligned the market to do whatever it wants to do here. Understand? But for you to start trying to take trades afresh here, to risk a part of your capital afresh, in this zone, this is a quagmire of chops. You don't take trades on a zone. You wait for the zone to break out and break out convincingly in a manner that will give you, as a trader, the inkling to enter. As a matter of fact, the market will tell you when it's ready to move, not just with a break. I mean, we have grown past that. Now, if the market breaks above, just like it's done now, and then pulls back nicely, remember what I told you about the ABCD, A to B to C to D pattern? That's what's going to play out here. So we like the market to form nicely around that zone. So this zone now, so this is a swing, A to B. You can see that more than 50% of the distance have been taken out, and the market has come here and reacted. So C to D nicely, that's what's going to happen. But I'm going to show you guys something that is happening here, so you guys can see price action for what it truly is. Not only in our descent or our pullback to demand, did price action then decide to create an inverse head and shoulder. So guys, look at this. So this is a zone right here. This is the neckline of this inverse head and shoulder. So this is the left shoulder, and then this is the head. So the market came here to create so the market gives you clues. That's the head, and then this is the right shoulder. So where's the true? So this is the right shoulder. The market came here and created a bullish reversal candlestick pattern once it got to demand zone. So this is another cue, and the market broke above it. Now, some traders, you're still trying to force trades. You have to be patient, guys. There's a way to go about this. You need to be patient and allow the market to actually, like literally knock on your doors. If some very professional, prominent traders put it in their videos, you need to wait for market to literally knock on your doors to tell you, hey, I'm ready to move. Don't just try to force trades because you run into issues. So even when you have identified that there is an inverse head and shoulder right about here, so even when you have identified an inverse head and shoulder right about here, you don't enter at the break. You wait for a retest. Now, this comes back to how I love to enter trades. If you look at most of my videos, I've always told you the one candlestick pattern that you should rely on. I mean, leave all those things like haramis, marabozus, three soldier pattern, pin bars, inside bars. You don't need all those things. As a matter of fact, I made a video recently about that. There is only one candlestick pattern you should trust, and you don't use it randomly. And it's the engulfing candle. So it could be a bullish engulfing candle or a bearish engulfing candle. You should use it in context. So in this way now, all I'm doing now, guys, to be able to tell how to enter this bullish trade, that is context. That is the market giving me a lot of data I'm now analyzing as a trader to be able to hop in. Now, you see now the market has created an inverse head and shoulder about here. And simple laws of price action says that once the neckline of any chart pattern is broken, you just need to wait for a pullback. Once there is a pullback to that neckline, you wait for a trigger. So in this case, all I'm waiting for, so I'm just going to take this out now. We have spotted that there is a zone there. So that zone now is now the neckline. So this zone, I'm just going to color it because I usually have color codes for my zones. So that's the color code for this. So that's orange. All I'm waiting for now is a real bullish engulfing candle of this zone. You can see the market is doing something like that. I'm waiting for this engulfing candle to be complete. Now, if this engulfing candle is complete, that's the cue. I'm good to go. Understand? So this is how to use this and ensure that the engulfing candle is complete. We don't need half engulfings. We want the market to tell us that buyers have taken over. We want the market to tell us, in this case, that buyers have taken over and not, buyers are malingering. We want a full bullish candle break. And that's what the market is doing about it. So I'm very optimistic about Bitcoin. Now, if we take Bitcoin in this way, this is how we line up for this trade. So this is how we line up for this trade. Our stops will come under here and overall take profit will be here because this is the last high that Bitcoin created. So we're getting a risk to reward of about 1:4 on this kind of trade. So that's enough to 1:4. I mean, if you're risking 3% on 1:4, that's a return of 12%. 12% return on investment. That's a lot of money. And it also matters most if you are trading a very large account size. Now, I'm not only going to wait for this setup. Actually, this is going to be my first take profit zone. I'll take my first take profit here. Why? Because that's the 100% retracement. So you see me using these terminologies. That's how I trade. And if you want to learn more on how I trade, I see a lot of it here on this channel, like, counter trend line breaks, 100% retracement. I talk about a lot of those terminologies. And I actually have a course to be able to help you guys narrow in on your approach to trading. So the course is linked below, and the course is a transformational one because it's me pouring out all my expertise, all my knowledge on how to make traders really, really see the chart for what it is and not to be clicking buy and sell buttons up and down. So this course is going to help you to trade like a professional, to be able to see the market as clearly as I am seeing the market now. And, I imagine I'm trying to predict, I'm trying to get into a trade for Bitcoin. Now, not many people see the market like this because people enter charts and then wait for signal groups or maybe indicators to tell them what to do. But this is me telling you and showing you reasons why something is happening and why you should be cautious of this, thing, and why some traders make a lot of mistakes doing this. I mean, all these a lot more I poured into that course. So if you really, really want to trade this way, go and grab the courses. The link is in the description below. And for this particular trade, guys, you need to also be cautious of risk management. And by the way, I talk about risk management in depth as well in my course. So you can know how to manage your trades, and when it's time to scale up, you know when to scale up. Understand? So in this trade, if you want to fine tune your entries for this trade, all you need to do is to come over to the 4-hour time frame like I've come now, and if you want to fine tune your entry for this, come over to 4-hour time frame and wait for this counter trend line to be taken off. Now this is double confirmation, guys. So double confirmation. So if that happens and the 4-hour counter trend line is taking off, the market is about doing that. So we're soon about having a trading opportunity for Bitcoin. So all you do is wait for that. Wait for the counter trend line break to be complete. So this is going to be your first take profit at the 100% retracement. and then your entire take profit will be here. Guys, I've given you the code, and that's how to go about it. So that's it for Bitcoin. And actually, this is a nice picture to take for. So that's how to trade like a professional, and that's how to see the market for what it truly is. Now, guys, if this criteria isn't met, I'm not going to hop in on this trade. Like simple, you just only need to wait for your trigger to materialize before you take any entries. And that's it for Bitcoin. I mean, this has been a long ass video, and I do hope I've been able to show you guys how to trade this so that you can trade it with all amounts of clarity and confidence. Imagine where you are about to take a trade and you are very convinced, because not many traders get to that stage. A lot of traders are emotional about their trades, and being emotional about your trade is a recipe for disaster and blown accounts. I said it on some of my training resources. If you are an emotional trader, you are not going to succeed in this game of Forex. Take it from me. And the only way to become confident in executing your trades, irrespective of what the market wants to do, is by knowing how to go about it the right way. So when you see me, I tell you that sometimes 1 week, 2 weeks, I don't take a trade. It's because I'm allowing the market to do its thing. Once the market gives me a trading opportunity, I will enter the trade, just like I waited for the USD CHF to play out. Once the USD CHF, once the trigger was there, I entered into that trade. As simple as that. That's how I'm waiting for this trade as well. You are not going to see me telling you that I'm already in a trade. No, I'm not in a trade now. I'm actually waiting for that trigger to be kicked off. Now that's it for Bitcoin, and it's been a long video. My next video, guys, I'm going to talk about what's happening on other currency pairs. It's a pity that this video took that long, and I'm happy it did in a way, because I've showed you guys how to actually zoom in from having a high time frame bias. You just come into a blank chart, you now zoom out, take whatever information you're getting from the high time frame and zoom into the low time frame so you can trade in the direction that the high time frame has told you. That's how to trade. And you use this same methodology, like I've just done in this video, apply to your other currency pairs, like those ones on your watch list. Like I've got a couple of them here, but time won't permit me to go through them. So the same way you know exactly where Bitcoin is about moving, you know exactly where Euro USD, AUD USD, Euro NZD, whatever, S&P 500, the same tactics all along, guys. That's what you're going to do. That's what you're going to do and trade profitably. So that's it for this video, and in my next video I'm going to talk about another currency pair and some other things and juicy updates to come. So do not rob yourself of the chance to be able to trade like this, to actually see the market for what it is and trade in the direction of the trend. So when you hear people say follow the trend, this is the exact way to follow the trend, not just by telling the trend is bullish and then you head over to your ideal time frame to go and start clicking buy and sell buttons. You just plot some kind of levels and you think that the market is going to go in. Like, that's why a lot of traders fail at this game, because there is a way to draw your key zones. There's a way to draw your key zones, guys. And if you don't draw your key zones that way, you're going to be messed up. You're going to mess up. You're going to mess up all your trades. And if you don't have an approach, which is what my course teaches you to, the best approach to get in this game is to adopt this principle, this trading methodology. If you use it, I assure you, your trading will be 10 times clearer and you'll be very profitable. You're going to shorten your learning curve and then live that life of, being actually profitable in Forex and getting all the whole money and doing whatever you want to do with your life. Why? Because you have that skill, that rare skill of trading the right way. So I think I've said a lot on this video. Head now and get yourself the course, and I'll see you in my next video.